Well, I mean, I can't say I don't share their concerns about valuation. When we take a look at the broad market and, of course, technology, but sectors across the board, you do see valuations at extremes. I think those extreme valuations mean that a lot of good news is priced in. So even though we do see earnings deliver, I think a lot of the expectation was already there that we would see that. So any sort of a question mark, we have tariff cases, we have the Federal Reserve, and questions around what that cutting cycle could look like. Anything that could really question the market narrative just could be something that pulls the market back a touch.
Marta, those are all fair things to bring up. There's certainly things that could impact the market at any time, but they haven't, at least not up to now. We haven't really seen a
Right.
lot of pressure on the markets due to the government shutdown, questions about the Fed, et cetera. Today, why do you think we're seeing this kind of reaction, specifically when it comes to tech after Palantir earnings?
Well, I guess the one thing I would point to is as kind of credible leaders raise the possibility of valuations and raise the possibility of a sell-off, I think that can just cause investors who were already nervous about valuations. I mean, valuations is a hot talking point in kind of every media outlet that you see. I think it can kind of cause people to act on what they already know to be the case in terms of how the market is priced. So I think it's more just the possibility that this is already an issue in the background, and you don't need much of a push to get things over the edge.
Okay. To that point, obviously a lot of people think this market is priced to perfection, but do you think we may even be seeing some exhaustion when it comes to the AI trade? The flurry of deals, the flurry of announcements about partnerships and tie-ups and circular spending. Goldman Sachs out with a note just a couple of days ago I thought was pretty interesting. We're talking about the reward for earnings. For the median stock in Q3, it's about 32 basis points of a gain after earnings. Historically, it's almost 1%. What does that say to you about investors and just how they're viewing some of these reports that have been strong? It's been another strong earnings season. It's been strong all year, in
Right.
fact.
Right. I guess I would make a distinction between what we consider to be extreme valuations, certainly for technology, and an AI bubble. And I think that distinction is really important because I think extreme valuations do suggest that prospective 3-year returns can be weaker. You pulled some of the return forward, experiencing it now from the future, but it doesn't necessarily mean that the fundamentals are overly frothy. And I think that's what we're looking for when we think about an AI bubble. So when you think about concerns around AI and the circular financing, the debt issuance that we're seeing some of these companies, even the hyperscalers, begin to engage in, just the massive capex that we're seeing, I think all of those are signs of a massive investment, but they're not necessarily signs that we have kind of lost perspective at the moment. I think we'd want to see a lot more debt issuance. I think we would want to see revenue be failing to deliver. We haven't really seen that. Actually, cloud revenue has been pretty strong, which is that first green shoot of AI demand. So I don't think we're looking at fundamentals that are bubble-like, but I do think we are looking at AI exhaustion from a valuation perspective.